Good morning, everybody. Happy Fat Tuesday. This is pre-market prep, and man, it's deja vu all over again. It seems like every day for the last 3-4 days, the overnight market trades down, and then at some point during the day, the market will rebound, and that's what it's doing again this morning. The market is trading down, so we'll see if the second half of that trend continues later on in the day. We're going to recap yesterday's action. It was just a buy growth kind of day. We'll talk about Bitcoin. We'll talk about solar. We'll talk about earnings. We had a number of big earnings reports last night to end this morning. We had Zoom, we had Target, we had Kohl's, AMC reports tonight. Don't forget that. So a lot to get to. Ryan Detrick is today's guest from LPL Financial. I'm sure he will have some great charts for us looking long term beyond this conflict. So smash that like button, and this is pre-market prep starting right now.
Coming to you live from downtown Detroit, this is Benzinga's pre-market prep with your host Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, so I'm being informed that we're having some technical issues on the YouTube, but we're still live across the board everywhere else. Mitch, are you getting us live on YouTube?
Yes, we are live on YouTube. The only thing, we're on the wrong stream right now. We're on live trading stream instead of pre-market prep. So I will adjust everything over while you guys are watching. But just stay tuned right here, guys. You'll see everything come on over. Grab the wrong code, so it's on me, guys. Today.
All right. Joel, good morning. Dennis, good morning. How we doing?
I'll give you the numbers, and the numbers are down. We're down 37 handles at 43, 31 and a quarter. Man, we went right back up to that crazy area. We all know where the resistance is in this market. Crude ripping over $100, up 509, 10081. Gold, that's moving too. It's moving higher. Sympathy trade or chaos trade, that's up 1660 at 1917.50. Silver, that's in the green too, 26 cents at 24,630. Bitcoin, if it's ever going to rally, it's going to rally now. Up $2,900 at 44.9, coming up on a very, very, very important level at 45.5. And Ethereum, that's going the same way. Not as much on a percentage basis at 29.55. That's up $116. Triple D, I just have to ask you how you single-handedly support the entire stock market until it closes at 8 o'clock. I mean, does Bob know how much capital you're using to support the entire stock market?
Yeah, I know. We do. We hold the stock market up, and then we quit trading 8 o'clock, and the bottom falls out of it. Isn't that the way it works? Seems like that every day. Is that what happened again last night too? When I left, S&Ps were flat. And I come back, I go to sleep, I wake up, and it's going down. You guys can't keep the market up without me. It's all my buying pressure holding up the entire market. I stop buying, I stop providing liquidity, and all hell breaks loose.
And who the heck?
They should pay me more.
2:15 in the morning, between 2 and 2:15. Someone bought this thing near 4,400. I don't know what or why or who. Well, I don't know what they were thinking. I don't know
what any buyers are thinking. The people who are chasing anyways. You can't chase, don't chase, please don't chase. You get a second shot. It's the market. Even when the stocks go back up, they always give you a second shot. Case in point, Upstart. It was the one that everybody was chasing off the good earnings report at 150. And they look at today, like 157. What are you talking about, Dennis? But you know what? For 4 days, went back down. It filled the entire gap and gave you another chance. They always seem to give you another chance if you really want to get in. This is the market that you just don't need to chase in. So,
at the same time,
and I can't find the show.
No, I know, because
nobody can.
No, we
start over.
Did we just start over?
No, we're not going to do that. We are live. Okay. We are just live.
I can't find us either. My dad's going to be going crazy. He can't find us.
Okay, you ready? Can I
How do we find the show? And this isn't going to help anybody because nobody can hear us for us to tell them how to find the show.
No, they can, and I'm making sure that everyone has the link. I'm putting the link in the chat right now. I've been putting it in the chat.
The problem is the chat. I can't find the chat either. I can't find.
I can find the chat.
All right, Dennis, see your private message. Sure that everyone has the link.
Oops.
I'm putting see your private message there. That's where the show is today. Okay. Different URL. We'll fix it later. We're gonna fix it later, but we're still alive right now.
All right, we're just gonna go. I'm not reading because I don't know where anything is, so I'm lost.
We shouldn't start over.
No, we are too late. We've gone too far. So let's keep going here, and let's talk about just yesterday's action. As I said, it was just a buy, growth, everything kind of a day. Whether your growth is solar or ARKK type stocks or Bitcoin. It was just one of those days. And I know there are some macro headlines in favor of solar specifically and maybe Bitcoin specifically, but what do we make of that action yesterday?
You went all over the place there. So solar,
well, yeah, solar. It's all growth though. Solar, ARK, Bitcoin. It's all growth, and
I will say I agree that stuff is all moving together right now, and it's been the play. I mean, I'm going right back to what I said 4 days ago, one day too early. That if the Fed's not going to be as aggressive, they're going to start buying the beaten down high growth tech names, and that is exactly what has occurred. Again, I was 24 hours early on that call. Everybody, I was 24 hours early. I got stopped out on some stuff. I turned around and bought some stuff. The stuff I bought was very good. I'm feeling like selling some of the stuff that I bought for the simple reason is that it's gone up so far, so fast. But I mean, ARKK 57.50 up to $71 yesterday. That's a quiet little 20% rise in 3 days. So I don't think you can chase. I just got done saying about the chasing. I think you still are in the same predicament here. Chasing has not been working, and now you're chasing. I mean, yeah, you can say, oh, yeah, ARK was 190, now it's 70, or 170, now it's 70. It's still cheap. Yeah, but it's up 20% in the last 3 days. So maybe we get a little 50% retracement of this recent pullback. It seems like this is the market that continues to find reasons to sell stocks off. And are we out of the woods on any of this stuff? I don't think so. So I don't think you need to chase. But with that being said, yeah, I think on pullbacks here, I'm adding high growth. And if there was ever a case for Bitcoin, it's right now. I mean, this is, with the situation, with people not being able to take their money out of the banks. Shizzy, I completely agree with you. You reached out to me, Twitter follower there. This is the case for Bitcoin right
best
now.
Case.
So
absolute best
Bitcoin,
case scenario.
This is best. Right now. This is as good as it gets for Bitcoin. So Bitcoin should be rallying, and it is rallying, and that's the good thing. So for all the hodlers out there, this is what you need to see. You need to see Bitcoin. Can we bring up a Bitcoin chart? Because that's what we're talking about here right now.
Yep.
Bring up a Bitcoin chart here. It's rallying significantly, as it should be, because when people can't make withdrawals from the bank, they're going to be like, well, if I had Bitcoin, I could get some money right now. So it does make sense. This is a use case for something like Bitcoin. And I'm not saying I'm not chasing Bitcoin here either. On pullbacks, maybe you're buying it. I've been bearish since 55,000. I sold a bunch of my Bitcoin at 55,000. I could scalp 10,000 if I just rebought 44,000 right now. But I think I'm not going to. I think I'm going to wait for a pullback here. Plus, that technical resistance in that top right corner looks a little bit strong there too.
Yeah, it's big. It's big. Well, I did a channel check yesterday when I went to Walgreens, and I asked the young lady if I could pay in Bitcoin, and she said no. So it's still not readily acceptable there.
That's good to know.
Yeah, that's it. My channel check. We talked about this on the At the Close show. I mean, you're right. It's a perfect fundamental reason to own Bitcoin, right? And then now technically, so the fundamentals, the news is driving it to a level. That level is 45.5. That was the level that held up for eons, right? On the way down. We held. It finally cracked and made one run at it in mid-February. We're back here again, so I'll just be keeping an eye on that. I like to watch the futures. You guys know that. Well, I got rid of my horizontal line. So, not only do you need to to take out that level, but you need to get above it, close above it, and whatnot. But there it is. There's a great target for you. And then if you really want to get excited, you get halfway back of that break from 70 to almost 30. That takes you. That 50% probably gets closer to like 52, 53. So we'll see. Resistance is there. Let's see if it holds or if it gets there today. Of course, any kind of good news on the war front, not going to be good. Not going to be good for Bitcoin.
Well, some of these, yeah, exactly. You've got oil and you've got Bitcoin moving opposite to the good news there now, because the political unrest, not being able to take your money out of the bank, perfect environment for Bitcoin. So the relationships are still there, though, and Bitcoin is still moving with overall growth, but it has its own story going right now, which is going to carry it a little bit farther, and that's what's carried it. I mean, we're 36,000 a week ago, so it's been a big move. It's been a nice move. I'm not chasing that either.
How are the stocks doing? Are the
Bitcoin stocks?
Yeah, like MSTR.
Yeah, no, I was gonna go there next, so it's good that
okay, go ahead.
Yeah, well, like people were asking about the miners, right? Like Mara and Riot, right? I mean, those are your two big miners. I think those are your two largest by market cap. So, I mean, how do you approach these guys? I've always said if you want to own Bitcoin, why not just own Bitcoin? Why own a miner? But I mean, God, they're so beaten down. I don't know how I guess you could buy them and stop yourself out the recent lows.
Yeah,
I own Hive still, and it's been terrible. It was really good for a long time. I sold half of it, should have sold all of it. That's the only one that I do own of the miners. At the chart, I actually don't mind down here on Hive, HIVE. Kind of got the double bottom in place here. It's starting to show some life, and obviously going to be up to date with Bitcoin. Mara, huge support at 20. So you got a support line there. MSTR, again, these have had such big moves. I think I need a pullback on them now as opposed to chasing these things. But there's some opportunities here if you were to get a pullback, I think. I do own Coinbase. That one's been terrible. It's sloppy double bottom, because we kind of went through and took it out the 162 and we got all the way down to 155. But all of them look like they kind of put in a pretty solid bottom. Whether that eventually gets taken out, we never know. But again, I still think there's a case here where crypto, or at least Bitcoin, is going to be in favor for a bit because of everything we're seeing in the news. And the story is hot again. So I think on pullbacks, you may be buying Bitcoin.
Wow. Okay. All right. SP's trying to get off that low 2250. Nothing there. The intraday low, it looked pretty bleak intraday yesterday too. It looked like we were really, really selling off, but that intraday low is 43.10 and couldn't quite get there yet. Let's see. No, we didn't have an inside day yesterday, and we're not going to have an inside day today because we've already taken out the high. But it does seem like we're finding a home here in the 4,300 handle. Of course, it's all over from 43.10 to 43.80, back down to 43.20. But it's settling in. I mean, I think overall, you look at the circumstances here, and I know I see us down 30 handles. I know we're down all that from the old, far from the all-time highs. But in the back of my head, I'm like, man, this market
very resilient.
Yeah,
bounced
and I'm
off.
Gonna go out, and I know you guys are gonna
FOMO's there. We still got FOMO. FOMO is dead 3 days ago. It came back with a vengeance. The FOMO is there. They're buying those stocks. I think you're buying risk assets on the pullbacks. So again, I've said this already. I don't like the response, but the oil stocks did break out and make new highs yesterday. So that's good news. It's been slow. It's been a tricky market. I mean, it's not just this market that, it's going to chop everyone up. So if you're using any type of risk management techniques, you're probably getting stopped out on a lot of trades. And that's tricky because I'm disciplined. I like using risk management. But the ranges are so wide, you got to widen the stops too. So if you don't like losing as much money, you got to decrease your size and widen the stops. The only way you're not going to get stopped out on everything here. Because the moves are wicked. I mean, and maybe we should go to Target this morning.
Before we
These
do that,
wicked moves even on earnings.
Before we do that, I just want to throw something out there. I hope everyone's sitting down with this. I was talking about this with the buddy.
Okay, I'm sitting down now.
What if that 4,100 low last week, okay,
Sure.
Let me go to the S&P.
Yes, please.
What if the 4,100 low is the new 2,200?
Wow, I can't even believe we're having this conversation right now.
So you mean like that was the blowout
I can't even
low
believe.
So
Joel,
what he's saying?
I can't even believe that if I could just play you a clip of 3 days ago.
I said if. I said what if. I didn't
There's
say
the
an
possibility. Let's play out two scenarios. One is it continues to escalate over there, and a lot more people die, and it starts to get threatening to other countries. That is the negative.
That won't work.
The positive scenario here is that it de-escalates, talks get somewhere. Maybe they don't join NATO. Maybe there's some compromise or something like that, and Russia backs off. I don't know if that's happening, but if that was to happen, you could see all-time highs in the market. If the war was to somehow, rectify itself, and I don't think it's going to happen.
Either do
but
I.
That's the scenarios. And that's all that matters here right now. So we can use technicals as much as we want, just like I said yesterday. But this is a headline-driven market, and we don't know what the next headline is. I mean, the nuke talk scared the hell out of the market yesterday, but then they turned around and they bought them up anyways. So the market called Putin's bluff. And we don't know if he's bluffing. We don't know if he's not. So all I can do is just trade the chop by buying dips, selling rips until further notice, and being careful that I'm hedged overnight because I don't know what the overnight next headline is going to be. That's how I'm approaching it. I'm not taking on myself off the 35% cash because I like the technicals for the simple reason is I don't know the next step. So I don't know what's in Putin's head. And he's erratic right now. He backed into a little bit of a corner, so it's a little bit scary. So that's all that matters right now is Ukraine.
Before we move on to earnings, I want to talk about these Russian ETFs for a second. And there are a couple of them. And if you're buying a Russian ETF, you need to know what you're buying right now because there are a handful of them.
Sure.
There's the RSX. There's a leveraged one from Direction, RUSL. There's the ERUS, which is from iShares. These ETFs are functionally broken right now. Okay, they are broken products. And what I mean by broken is that they're not trading off of the net asset value of the underlying assets. And the reason they're not is because we don't know what the net asset value is because the Russian stock market is closed. In the case of the RSX, RSX holds a bunch of Russia-based companies that actually are listed in London. And those depository shares, what the RSX holds is depository shares in London, which are basically carbon copies of the primary shares that are listed in Moscow. Now, Moscow is closed. Market's closed yesterday, today. Who knows when it's opening? With the London shares, the depository shares in London having no frame of reference, it basically creates a guess. The London shares are trading at what the market is guessing they are worth, and the RSX is trading off of that. So you're trading off of a guess. So whenever the Moscow stock market opens again, there's going to be a ridiculous arbitrage because we don't really know what these companies are worth. The market's guessing. That's for RSX. For ERUS, that's the iShares product. ERUS or iShares or BlackRock, whatever, same thing. They're halting redemptions in the BlackRock is. They're halting redemptions in their mutual funds and in their Russian ETF in ERUS. So the product is broken. It's still going to trade because that's what ETFs do. They trade, but it's broken. The creation redemption process is
they turned it off for now.
It's exactly. They turned it off. Now at the same time, I just saw. I was looking at the flows, and there's a lot of money flowing in
by the dip.
Like the RSX. The RSX has taken in $382 million in the last week. Okay, that's a lot of money for our.
It's probably from all the Russian bank.
I don't know.
It's from everybody. You know who's putting them. People see stocks go down that much. They're like, I got to buy that. It's natural. We've had this conversation. This is natural behavior. This is what people do that, aren't into the markets or are just on the side markets. They see something down big, they naturally want a deal. They want to buy it. There's literally things collapsing and people are so excited to get in there. It's not widely owned.
Vinny
so
says,
it's not like this is a huge investment vehicle that a lot of people are getting slaughtered on.
Wait,
what is the overall, like, do we have like a
Market
market
cap?
cap on RSX, or do we have something?
Well, Vinny says he saw that Korean day traders have been buying RSX, which I didn't see, but
I'm sure there's lots of people with FOMO thinking, oh, it's going to bounce back. Once this war is over, it's going to bounce back. And you know what? Some of it might bounce back a bit. But man, if you're too early on this trade, look at RSX. It was 25, then it was 20, then it was 15. Now it's 8. I mean, if it bounces back, it's at 11. If you bought it at 20, that's not doing you any good at all. So I personally am not buying any dips in something that is this many unknowns, but people like taking risk. They buy lottery tickets that they have almost a 0% chance of winning every day. RSX is like a lottery ticket right now. I don't know if you're going to win. It's going to bounce eventually, but is it going to bounce back to 20? I don't think so. And then you have RUSL, which is a completely different story. And this is a cool story, too.
That adds a whole other wrinkle to this.
They're shutting her down. So this is actually press release from the Pro, in the Pro last night. RUSL, bring it up, Spencer.
Yeah, direction.
So they can see it. It happened at 6:55 last night. Press release from Direxion, who obviously is the company that is in charge of RUSL. They are closing the fund and liquidating it. So I don't know what they're going to be able to get for the holdings, but obviously investors are thinking it's going to be a hell of a lot less. It is down 50% this morning, RUSL, because they are closing the fund and liquidating it. So that is a little bit.
Harry Turkish is buying. He said he bought some at 886 with the scale every 1 point down. So I'm asking,
what are you buying, Harry? You're buying.
We don't know what you're
buying. A basket.
Harry doesn't know.
You're buying a basket. No, hold on. He's buying a basket of stock. Well,
he's buying RSX at least.
He's buying a basket of depository shares that derive their value from a market that is not trading. So, what is a share of RSX really worth? We don't really know.
We don't really know at this point in time.
It could be worth 10 or whatever it is priced at right now. It could be worth way
once
more,
they reopen the stock,
or way less than that. How do you know? You don't.
It's much better to buy RSX than RUSL though, because RUSL is liquidating. So and you're liquidating into a market that's not open.
Yep.
Which is really, really scary. And just how inefficient this market is, and I know we have a lot of people calling for, let's reinstate the uptick rule. I've heard this for years.
Sean, I'm telling you right now, Sean is chomping at the bits, Dennis. He wants to go.
Reinstate the uptick rule.
He wants to
Sean realize, and I've tried to explain this too, that we have an uptick rule. The uptick rule was reinstated in 2010, more stringent than the original one, but only goes into effect when a stock or ETF falls 10% in one day. RUSL is under the uptick rule. Right now, the alternative uptick rule is enacted. The restriction is in place. And this ETF was trying to go down last night. It was, when this news came out, I don't know where it was 9. And what happens is you got the bid. But under the new alternative uptick rule, you can't even short on an uptick if it's not on the bid. You can only short above the bid. So you cannot hit any bid. Even if the bid is an uptick, you still cannot hit it. The rule is much more stringent than the original uptick rule for that reason, because in the old rule, if the bid was an uptick, you could hit it short. But in this case, you can't hit any bid. You have to short above the offer. And if you look last night, you'll see the slow crawl down. It took hours for this ETF to try to go down because nobody could hit the bid except a natural long. That's the only person that could hit the bid. So you have people buying on the offer that are buying something that has to price a lot lower. Very, very, very inefficient. The uptick rule always created a bunch of inefficiencies. It's like, all of a sudden when you had the tick, everybody gangs up on the offer. Do you remember this, Joel, back in the day? And the offer goes huge, and there's just the bids because everybody's trying to get short, but they can't. And then a natural hits it, and it goes like this, and the bigs they're still trying to short it, and they go down. This took over an hour last night. People who bought at 8, 7, they were buying a price that wasn't priced correctly. This is how market structure can make people lose a lot of money, because anybody who's coming in buying RUSL last night at 750 or 7 or 650 were uninformed, because the offer was so dang big, it was still trying to go down. It could not go down because of the tick. The shorts know it's going down. The shorts are the informed players out there. But believe me, anybody who shorts stocks, for the most part, the market makers are fairly informed. So anyways, nobody hit the bid. And the thing took over an hour to try to price down to where it wanted to be. Very, very inefficient. Market regulators, if you're listening to this, the alternative uptick rule, the old uptick rule, all it does is create market inefficiencies. It doesn't solve any problems. And Kramer has called for it too. People who don't understand market structure are calling for this. This is completely absurd to want to have a stock or an ETF be mispriced for over an hour last night because the shorts can't take it to where it needs to be. Now it's priced where it needs to be. You can easily get shorts on. It's not like a bazillion shares on the offer walking it down. But that's what they did in the old days. The bazillion shares show up on bad news, and they're trying to walk it down and trying to get it down. We got rid of the uptick rule. Efficiency existed. Prices repriced. Now we put the alternative uptick rule back in because of political people who are listening to people who don't understand market structure. And all of a sudden we have the same problem again, where stocks can't price to where they need to go.
Yep.
That's my rant. The uptick rule is stupid. Stupid rule. Creates market inefficiencies, solves no problems. People think, because an uptick rule exists, then there's going to be no bear raids and the shorts stop these shorts from shorting your stock. The shorts make things priced efficiently. Is it fair to the person who bought on the offer last night at $8 on RUSL? I would think, you want the thing pricing efficiently all the time, because the person who doesn't understand it, maybe you can say, well, they deserve to lose money if they don't understand that. But the majority of market participants probably don't even know an alternative uptick rule exists. So they think that when they're buying it at 8, they're buying it at a fair price. It's 5 now. So the poor people who were buying it at 8 last night were buying it when it would have probably traded right down to 5 last night, almost instantaneously. But no, it took hours to go down. Uptick rule just creates market inefficiencies. That's my rant. Done.
All right.
That was a good one, Dennis. That was a good one. I've heard it before. I mean, and the people, Dennis does his homework on this, folks. So if you want to, it's facts, and he sees it, in the markets like every single day. So it's, okay. But anyways,
I equate myself to like a line worker building a car. And you have people who design cars and they do a pretty good job. But sometimes you got to go ask the guy who's putting the car together if this is the most efficient way to do it. And a lot of times you just have people who just have concepts. And, they come up with concepts and, then they apply them to the line. And the line's like, well, this doesn't make any sense. This is slowing me down. Well, ask the line workers. We are the line workers. The market makers and the traders are the line workers. And, when you make hundreds or thousands of trades a day, you can see what works and what doesn't. But you have politicians or academics that have never traded a stock in their whole life trying to make the rules for the market makers to follow, when they should just go down and ask the market makers what works. But this is the nuts and bolts. This is how it works. But they're trying to make you sometimes put, a square into a circle, and it doesn't fit. So that's what you need to understand. You're a retail trader. Maybe you don't need to understand the nuts and bolts. But when you have Jim Cramer on there, restate the uptick rule. This is what we need. He doesn't know what he's talking about. He doesn't know what he's talking about. He's never been a market maker in his life. He ran a hedge fund. It's a completely different thing. Ask a market maker if you need an uptick rule, and they say it's ridiculous. I'm out. That's my con. There was
a comment in the chat that Dennis reminds me of Jerry Seinfeld. I can't tell if that's
I don't know about that
compliment. But the last thing I'll add on this, and then we'll move on. And I saw a few questions in the chat. Someone said, "Is if I can pivot it back to the ETF conversation, is this like buying oil when oil went negative?" No, it's not. It is not quite the same thing. If you're going to buy any of these Russian ETFs or any Russian stock that trades either on a U.S. exchange or trades OTC in the U.S., understand you're buying an instrument that reflects something where we don't know the underlying price yet. Understand that. You can buy whatever you want to buy, right? But like if you're going to buy like Gazprom, for example, right, the Russian national energy conglomerate, whatever, state-owned energy corporation, it's not trading in Russia. It's trading in the US because that's what depository share does. But the US security derives its value from a security that is not trading right now. So we literally you're buying. It's basically kind of like a dark market. You don't know what the fair price is. You don't know
what you're buying.
You don't know what you're buying. So if you understand that, then fine, go for it. But you don't know what you're buying, okay?
And make sure you understand that before you buy. That you're just taking a shot.
Yeah.
And that shot might work, but it might not work as well.
And understand there are risks. Like it is possible, not likely, but possible that the U.S. exchanges could. I mean, actually, it's not possible. They already did it. The U.S. exchanges halted trading in a bunch of Russian stocks yesterday. The OTC markets are a little bit more liberal in their rules, but there's depository risk. There's like risks of the depository bank here. Like you don't understand. It's complicated stuff. So all I'm saying is if you're going to buy any Russian-based stock or ETF equity, whatever, understand you're buying something without an underlying price. And that is scary.
Very scary.
Very scary. All right.
Before you move on, we got to mention that it's Fat Tuesday, right?
Yes.
And the Punchkis in the office. I saw that.
Yes.
So.
I brought some.
Okay.
You missed them.
We just got to get that in today.
They're already gone. It's 8:32. We're going to have Ryan Detrick on in 2 minutes, but let's just do like one
stock.
One earnings report.
Target.
You want? Okay, fine. I was going to do Zoom, but let's do Target. Target had earnings this morning.
Wow.
I was at Target over the weekend for the first time in a long time, actually. And the earnings, the numbers this morning were really, really good. Well, the bottom line was good. Top line was more or less in line. It was a smidge light, but the earnings per share $3.19 versus a $2.86 estimate. They expect digital revenue growth in the low to mid single digits for the year. I have not looked at the stock at all. I don't know what it's doing. Oh, wow. Look at that.
Oh, yeah. No, gone. Blast off mode. This is what we see every single day. We see a stock up 10, 15%, a stock down 10, 15%. And some of these stocks are stocks you wouldn't think could go up 25 points in a day. I mean, we're just in a very illiquid market. And there has been earnings plays where stocks went way more than their expected moves. Remember, we always talk about expected moves. This earnings season, we have seen some stocks exceed their expected moves by a significant amount. So a market maker is a little bit scared to just short it at the expected move. That has historically worked very well. What was the expected move in Target? I guarantee it wasn't 25 points.
No way.
Look.
There's no way it was 25 points.
Throw me under the bus here.
I bet you it was 10.
Hold on. I can do it. 15%?
No. 15
There's
points,
absolutely
maybe.
no way that
Guaranteed not 15%.
I mean, 230. I mean, it obviously the pre-market high is higher than that.
15 points.
15 points, which is significant too.
All right.
Pre-market high 32.30. I mean, will we get up there? Maybe. I would be, I'd use that as a target. It looks like 220 is holding as temporary support here. So I'd say 220, 230, early trading range here. You get above that 230, 230. And what's else? Your next double top is at 235. So there's a couple targets for you.
And let's just briefly, while we're here, let's just do Kohl's because, if you're going to do Target, you might as well do Kohl's. And then we'll bring Ryan on here. They had earnings this morning as well. EPS beat, sales missed, guidance for the year in line, and they're raising their quarterly dividend from 25.
That filled the gap?
From 25.
And no one told me?
From 25 cents a share.
You could have bought that, Joel.
They
and get all the
possibilities
of a, take it private thing.
They doubled their dividend, I was trying to say. They doubled their dividend.
Jesus, Murphy.
You know what? The Kohl's here. Would I buy a stock like Kohl's? I think you could. I think there's a reopening trade here. I think that there's a possibility that there could still be a takeout. I mean, its valuation is cheap. They're doubling the dividend. Again, not responding well to the earnings whatsoever, and that is a concern. So I think maybe you'll see what happens here after the open. And it's really chopped around on this earnings report as well. I mean, it was down, it was up, it was kind of all over the place. I actually took it short into the report because somebody was willing to pay $57 last night. And I was like, well, that's $1.50 lead. I'll try it. And then I was able to get out right on the report, which just around, so I'm already out, so I can freely talk about it. Small position, there wasn't a lot, but I actually don't mind the report. I don't mind the company, but I don't love that it's not responding that well to it. But maybe it's just a tough tape today.
Yeah. All right, let's bring on Ryan Detrick from LPL Financial. He's their chief market strategist, and he always has a nice long-term perspective on things. And if you need an endorsement, look no further than our chat, where Thadder just said, Ryan Detrick, my go-to Twitter, read every tweet. I don't know if I read every tweet, but I read a lot of his tweets. So.
I do.
So Ryan Detrick, good morning, sir.
Well, I got to thank my aunt for that kind comment. No, that was not my aunt, but thanks for that.
Hey Ryan, before we get to the markets, I just want you, your Bengals did a great job. You went with your mom, right? I think I saw that on Twitter. You took your mom to the Bengals game.
Well, no, a little different. So I moved down to Charlotte from Cincinnati, and she flew down to Charlotte to watch the game with myself and her grandkids. It was a fun ride. You know, I'll never get over that last play where Joe Burrow, if he has a half second left, Jamar Chase is literally wide open for a game-winning touchdown. But it is what it is. But it was pretty amazing.
I was torn because, I have people like you, in Ohio and, not a big LA fan. And, and I have some other good buddies from there. But then on the other hand, I never want to see anybody in Ohio happy. Right. So it was rough. But anyways, we can get you on to talk football here. We got you on to talk about the markets. And you must have had to be digging deep into your war chest here to give us an assessment of this market. So I'll let you take it away.
All right, let me share my screen here. Okay, yeah, this should work. I think it's working. You guys see that?
I saw you tweet this morning about the month of March usually being a positive month, but let's back up for a second.
Simple. I love simple.
All right. So, yeah, is it really that simple is the question that I have here. Clearly we can't minimize what's going on, and every morning you wake up, it feels like it's getting worse and worse. But from a purely investments point of view, we went back, and I think there's 37 there. Don't check me, but I think it's 37 different geopolitical events. And it is what it is, guys. If you're not in a recession, stocks are up like double digits a year later. If you are, they're down 10%. So, some of these events actually caused recessions, or you were already in one. So it's very simple, and we do not see a recession. And I know, this crowd probably wants a little more, more technical and small term ways to look at it. But this is big picture view. Historically speaking, if you avoid a recession, as terrible as the things that are happening are, this big pullback, and honestly, you could argue bear market, right? You could argue bear market for a lot of people. It potentially is actually more of a buying sign and not something you want to worry. Now, you mentioned March. Here you go. It's kind of one of those, again, it is what it is. Good riddance to February is what I say here. But, March in a midterm year is the fourth best year. The last 20 years, the fifth best year. It is skewed, yes, because there was that little joke, 12% drop in 2020. So if you throw that out, March is actually had some pretty good performance overall. March, April strong, then you get the summer choppy months, then the end of the year. But the big picture thing, guys, I really want to focus just a minute on. We knew coming into this year, it was a midterm year. We know midterm years usually aren't that great early. And what I'm sharing, this is a breakdown of all 16 quarters on a 4-year presidential cycle. What do we know? Well, early in a midterm year, things usually aren't that great. You can see that the next quarter, so that's starting next quarter here in a month. That's the worst quarter out of all 16. All right. And it's not an excuse. It's just one of those, let's just be aware of where we are in the cycle. The good news, and let's bring some good news. The good news is usually once you get close to the midterm elections, get through the midterm elections and the uncertainty that they might bring, you tend to have some really strong performance. So those are some big picture things that I wanted to share. Maybe one more, guys, and then we can jump into Q&A if you want.
Sure.
Down the first 2 months of the year, right? Just happened. I mean, what does it mean? Well, here's the chart. We were just down the first 2 months, at least for the S&P this year. The last couple times, you've got 2020, 2016, and 2009. Terrible starts to years, but the rest of those years are really good. You go back longer term, though, you guys can see it there. The final 10 months, there's been some negative returns. Again, Some of those worst years, though, 73, 74, 2000, 2002, those were, bubbles popping or bear markets, right? I'm sorry, not bear markets, recessions. So again, we don't think we're in a recession here. I mean, you look at the data we've been seeing, it's pretty strong. So these are just things to be aware of, that this rough start to the year is as aggravating as it's been for a lot of longer term investors. I serviced more than nearly 20,000 advisors. I wouldn't say blindly buy and hold, but again, for longer term investors, this has been aggravating and frustrating, especially when you look at bonds haven't given you any protection. But just be aware that there could be still some opportunities longer term, the rest of this year, if not further. So I'll shut up for a minute and you guys can fire away.
Well, it's counterintuitive in a lot of ways, Ryan, right? Because it's almost as if the Russian-Ukrainian war thing has that's taken over, but it's not as if the prior market threat of interest rates has gone away. It hasn't.
Right.
Maybe it's lessened a little bit, but it certainly hasn't gone away. So if I was to be afraid of that a month ago, I should still be afraid of that today. You know what I mean? So
yeah, I do. You also, I saw just this morning, right? The chance of a 50 basis point hike in March is down to like 2%. Remember, it's 95% a few. It's like one of those sports games where the ESPN predictor, who wins, who loses, gets volatile at the end. But that's true. But again, we're in the camp. When everyone said 8-9 hikes this year, we said, let's kind of hold off. Now, we didn't know Ukraine-Russia was going to take place, but, we think, hikes are coming. And let's not forget, though, you look at the last 7 interest rate hikes, with the first one in the cycle. A year later, stocks were higher, 6 of them. You guys go back to the last 5 times the Fed did hikes, okay, back to 1990, the first hike in a cycle is what I meant to say. Every single first hike was 25 basis points. We just kind of knew that. We said, they might go more slow and steady, and hikes are coming. They have to slow down inflation and take their foot off the pedal of the metal. We know that. But again, we were skeptical, 8-9 hikes, 7 hikes with 50 basis point hikes to start off. That's kind of off the table. So you could argue what's happening in geopolitical events maybe could bring the Fed back slightly more dovish, and maybe that could be another potential positive down the road. One other chart, guys, I want to share real fast. Just the idea of recessions, I'm sorry, bear markets. The idea of bear markets, right? You can have a bear market without a recession. We've only had one like the last 50 years, though, in 1987, when we had the crash without a recession. So these big picture things that I know, 98, 2011, and 2018, all were like down 19.
I was going to ask you about 2018. It was
down 19. But the key concept, again, it didn't go down more than 20, or it was right there. Like intraday maybe was there on that Christmas Eve low. But again, that's about as low as it gets if you're out in a recession. So that's important to remember, which brings us to this. I went back to 1980, found all the 10 to 15% corrections. Again, no one knows when this market's going to bottom. We do know we just had a 12% correction on the S&P, though, and sentiment's pretty lopsided. So in this range, check out a year later what happens. Really up 20% on average, and 2 years later, good. So again, these are just different concepts and ways to look at it. We knew this would be a volatile year. We knew the Fed was going to be hiking. We knew the economy is going to be slowing. So those things we knew. Do we really think we'd have this bad of a start? No. But we expected a 10% correction at some point this year, when we only had a 5% correction all last year. And again, if the economy is still healthy like we think it is, this chart right here is a pretty powerful one, I think, for investors that have more of a 6 to 12 month horizon.
We're on the line with Ryan Detrick. He's a certified market technician over there at LPL Financial. First of all, love your quote here, Dennis, or Ryan. And Dennis, I know you're going to use this one in the future. It's from Yogi Berra. It's tough to make predictions, especially about the future. And that's certainly that situation we're in now. But what I want to ask you back, and I don't know how deep you dug into those. You said 39 geopolitical situations.
Here we go. I think it's 37, but close
37. What is like the closest one to this one? This is the big kahuna. Is it, including World War II? Because we've had so many skirmishes over, the last century, geopolitical events, the Cuban Missile Crisis and stuff. Do you have something that, equates to currently what we're facing here?
Great question. And I mean, potentially the Iraq war, right? When Iraq invaded Kuwait, we saw a massive spike in oil, and that caused a recession in late 1990, as we remember. So again, no two times are the same. But what's unique about this is, when Russia invaded Crimea and Georgia, everyone was upset for a while, and then it's kind of got over it. I hate to say that, but that's honestly what kind of happened. What are the four most dangerous words, right? This time is different, said Sir John Templeton. This time is different. I don't think the rest of the world is just going to back off and be okay with how this ends. I think people are upset with Russia, clearly for a lot of right reasons. And so this time is a little different. And the impact of that, look at Germany. I mean, Germany might be in a recession as we speak. If there's some hardcore impacts on Russia, and there are going to be, and there should be, that's going to potentially impact Europe. And again, with the money that we run, almost $75 billion, we had a team meeting just yesterday. We're still overweight U.S., and we're talking about maybe downgrading developed international because the fallout from the potential sanctions to Russia could impact clearly at least Western Germany, specifically Europe, and that's a big part of Germany's big part of Europe. So that's kind of how we're seeing this play out. But again, no two times are the same. But investors need to remember, if the economy can avoid a recession, and we think it will, it's still probably an opportunity for longer term investors here.
I mean, it's just, good to have somebody like you on the show every once in a while here, Ryan, because we can get caught up in the short-term trading. Sure. I'm a short-term trader, and flip-flop opinions a lot, obviously, as, I get new information in, but just to sit back, take a longer-term approach, and sometimes that's what you need to do as a longer-term investor is maybe ignore all these risks and just say, hey, it's going to be okay. And what you're kind of telling us is, in all likelihood, it's going to be okay.
Yeah,
and, you get these opportunities that present themselves, and they seem to be buying opportunities in the long run.
Yeah, I mean, we wouldn't say. I mean, thank you for agreeing there. I wouldn't say ignore the worries, because we don't want to do that. We want to be aware of them, but just be aware that things are there. The last chart, I actually shared all the charts I brought, guys. That's cool. Last chart. This is just what a midterm year usually looks like. Well, it usually is down the first couple months. Guys, as of October, I think it's 4th or 5th, the S&P 500 on average in a midterm year is negative for the year. Then you have that big end of year rally after the midterm election. So again, just things we knew coming into this year that are, not playing out exactly. We didn't think, again, stocks be down quite this much, but some weakness early. And I know because of, the flip with the more hawkish Fed and what's going on geopolitically, but for whatever reason, midterm years are kind of weak early, and that's playing out once again. So let's get closer to that at the midterm election, maybe get through some of the concerns with the Fed and clearly geopolitically. And maybe we can have that strong end-of-year rally, and stocks, in our view, are still fairly valued at 5,000. Feels like a mile away up there, but honestly, we still think it can happen this year.
Oh, man, all right. Ryan Detrick, Chief Market Strategist, Senior Vice President at LPL Financial. Always a pleasure. Ryan, tough game on Sunday, man, with the Buckeyes. I feel really bad for you. But thanks for coming on the show today.
Well,
and great stuff as always.
I am a Xavier fan when it comes to basketball, and we're
falling
apart there. So I'm falling apart. Yeah, I like Buckeye football. I don't know if that's legal or not. I like Buckeye football.
I
Xavier
forgot.
Basketball. So,
all right. Yeah. Thanks a lot, Ryan.
All right, guys. We'll see you. Take care.
All right.
Thank you. Bye-bye.
Oh, man. Great stuff as always.
Wow, what a ton of information there.
So,
he comes prepared, man. Like on the prepared list, he's right up there near the top of all our guests. I'm probably the least prepared. I just come in and wing everything, but man,
you know who he's up there with? Eric Kroll.
Eric Kroll. Yeah.
Eric is prepared always too. And who's the girl we had like a month
Cameron.
ago? Yeah, she was prepared too, man. She rocked it as well.
Yeah, triple dead heat for first. Yeah,
I got like our most prepared list. Those three be right near the top.
Let's do some more earnings here. Let's go to Zoom. They reported last night, and bit of a disaster here for Zoom.
But what a wild ride, though.
Yeah, right. No kidding. So the earnings per share for last quarter above estimates, whatever. Their sales above estimates, whatever. But their sales growth, I mean, it's come so far back down to earth. Their forward-looking numbers, their guidance. Implies a sales not implies it translates to a sales decline, an actual sales decline here. So the EPS and sales guidance were light across the board. I think they lost customers last quarter in a certain segment of their base. They actually lost customers. So yeah, it's brutal out there for Zoom. It really is.
But again, good response to a not so great earnings report. And maybe it's gotten to a point where valuation has come far enough down that it's not crazy anymore. I've challenged whether, the competition's coming and, whether earnings could actually start declining here. So I'm not that interested in it. But I'll tell you, they hammered it on this number. Again, the news algo just pissing money away because it seems like it's wrong all the time. Maybe it's selective perception on my part, but they hammered this thing down to like 110 last night, Joel, and they bought it back within like 5 minutes, was back in the mid 120s. And you know what? It's come back and it's down $2 on a pretty crappy report. Not a bad response. Again, you're seeing the buy the dip mentality, especially in the beaten down growth names in tech. And that's what we're seeing here again. It even took Zscaler a couple of days, but eventually Zscaler dip got bought as well. So I'm going to say on the earnings reports, when you are seeing the dips, it seems like they're more buying opportunities than they were a week ago. You have the money manager who maybe is a little bit underweighted those Kathy type names, and they're using the dip opportunities on the earnings reports to reload. And you can clearly see with Zscaler came back, Zoom bounced back quickly last night. That mentality and that FOMO in high growth tech is back.
Okay, this is kind of scary because I'm agreeing with Triple D, and then Jay is Spinner is agreeing with the both of us here.
Too many people agreeing. Spinner's a great trader too.
This
Jay
is probably the greatest short in the
I always listen to Jay. He's always got good
entire
stuff.
world. But notwithstanding the price action in the pre-market, that's pretty silly. I'm looking at the upper right chart, and I know you guys tell me that there can't be like a head and shoulders bottom, but there are head and shoulders bottom. If this can hang in here for a couple days, form a little bit more of a right shoulder, hold 125. The reason I'm throwing 125 out there is because that's halfway back of the move.
Yeah.
I would be tempted. I would be tempted on that, to risk down to the low of the move. And I have not tried to call, even though I tried to call top the whole way up, I've not tried to call bottom in this one. But that's what I'm looking at here. And I love Zoom and I pay for it. So I'm in the minority. But man, it's easy to use.
I think a lot of people love the product. I think there's a lot of fans of Zoom out there, and I've used. My wife has. She doesn't pay for it. We got the free one, but I mean, it's a great product. I just think there's so much competition. That's why I've been scared of the competition. And that's what's kept me out of the stock, and that's what's kept obviously me from losing a lot of money being long the stock. But at a certain point in time, it's bloody oversold, and maybe it's grown and it's fallen enough. The valuation isn't just nuts anymore. Maybe they come out with another product. That's what they really need to do, is come out with something else, monetize in a different way, because I think there's going to be a challenge for anybody. You can see right now, I know, like, I get the bloody email every other day, 50% off or 40% off just to upgrade. They're trying to get people to upgrade and pay, really hard. And it's tough.
If Zoom never comes back, and I don't know, maybe it will, but if it doesn't, I want that to be the death knell for the argument in favor of a company where it's the company is now a verb, as if that means something. Google is a verb. It's part of the lexicon. Zoom is a verb. It's no. I hate that argument. It pisses me off. Right?
You don't like verbs.
I don't like verbs. Super SpacMan wants to know what, Dennis, because you mentioned the words good valuation. What do you consider a good valuation? Is it a PE of like not below?
I like growth. I go with GARP. Growth at a reasonable price. Always GARP. Growth at a reasonable price. I like some growth stuff. I just don't like to play nosebleed valuations for it. Zoom doesn't have the growth now, though.
So PE is
they don't have anything.
PE is below 40, I think.
Well, it doesn't even. Yeah, but it could be. You've got to compare it. Go to your peg of 1. Price earnings to growth. You've got to look at different things and different ratios. And I don't want to throw the CFA hat on and bore everybody here. But I try to find growth at a reasonable price, or a stock that could eventually grow into the valuation. And, in some cases, it's like I can't understand how that could ever grow into that valuation. And that's why, I don't buy that in the long-term portfolio. I've said before, I think Square could eventually grow. It's trading 50 times earnings still, maybe a little bit higher because it just had the ridiculous 30% pop. But, I'm long Square. I got long around $100 because I was like, you know what? I could see the potential. I didn't really stick with it, Joel. I mean, I've been in it for 2 weeks, so I mean, it's not really like it's been
But
a
you've talked
long-term
about it. It
holding
feels
forever.
like you've added in longer.
Because every day feels like a year right now with so much going on all the time. But I think it was a couple of weeks. Maybe it was a month. Maybe it's been a month since I've been in there. But I look at it and there's growth, I feel like, and I feel like the price isn't crazy anymore. Do I want to pay 100 times for Square? No. Do I want to pay 50 times? Do I think, the earnings continue to go? Do I believe in Dorsey? I'm a huge believer in Dorsey. I mean, I think, he's done to have two companies, and you can say what you want about Twitter, but to have two companies as successful as Twitter and Square have been, that guy is smart. Now, and the same thing of the argument for Musk. I mean, investing in Tesla has always been, you've got Elon Musk, who is, unbelievable genius. So, but you got to look. So story is one thing. A sexy story can carry a stock a long ways. And when the story is hot, valuation doesn't matter at all. Once a story gets cold, then you got to start looking to valuation, and you got to look at, with the potential where, okay, can this grow into this valuation? If it can, maybe then, you strike. And in some of these beaten down growth names, there's probably some opportunities there. But you got to do your homework. And chat, I'd love your ideas as well.
Dennis, I got a question for you. Do you have any English or British origin in your blood?
Hungarian and Russian.
Okay.
That's me. Yeah,
because
I got the
you've
Russian
been using
background.
bloody.
My grandfather born in Russia.
Yeah,
you use bloody a lot.
He uses bloody a lot now.
Is that where it's from? Russia? Maybe that's from Russia.
I don't think so.
No,
I don't know. I don't know where that's from.
We're coming back, folks. I mean, I don't know.
But the dip wins again, Joel.
I'm shocked. I'm actually.
I said it. I said, we started rallying when I said is the 4100, the new 2200, and then Ryan Detrick comes on, and here we are, unchanged, unbelievable. What a rally back. We're still trying to get green here, but nice pre-market rally.
And then just to put a bow on the earnings here, let's just do Baidu real fast. They reported this morning EPS beat, sales beat, stock is higher.
Ooh, nice.
Very nicely higher. Baidu, wow.
Nice pop. Man, just been chopping these Chinese stocks. Baidu, Baba, JD, chop fast. Buying dips, selling rips, working like crazy. I keep playing that game until it doesn't work anymore.
We're not yet at the pre-market high, and that's really we got a little confluence here with that pre-market high. 165.40 is your pre-market high. I just obviously gaps are not as important in this. Right here, 163.28. That was the high that I'm pointing to right here. And if you want a little bit more, I mean, this is just, it's gaps, or this is not nearly as relevant, but you do have a gap to fill up to 164.59. So we'll see what happens in Baidu. It's traded 172,000 shares.
All right. Do some ticker time here. Quebec in the chat a while ago asked about Scott's Miracle Grow SMG, which I have not
SMG.
I have not looked at that for quite some time.
Oh, it's come down a lot.
It has. And again, this is the cannabis, but it's also like they have a business. They have other stuff going on. It's not just a cannabis play.
Yeah.
They got the fertilizer.
I think valuation could be. I think I actually like this stock. I looked at this. I had this for a bet, and I sold it. I don't remember when I sold it. It was a good trade. It was a good trade. I had it like the first swing trade, and it was a good one. It's up from the lows, though. And you look here, we're 126 now. You're 140. You'd like a 50% retracement back to like the 134, 135 area,
Yeah,
but I feel like valuation is reasonable on this one. What's the PE on this?
Oh, good question.
I think I looked at it before, and that's why I'm saying I think it's in the teens.
Benzinga Pro says forward PE of 16, very reasonable.
Very reasonable.
Price to sales of 1.6, also reasonable.
Little bit of growth. I like Scott's Miracle Grow. I like the stock.
Oh,
yeah. I don't like to chase, but I think we've come far enough. We're $250 to 140.
Mm-hmm.
I think this is the kind of stock that works. I mean, I think the valuation is reasonable. Again, I like pullbacks. I don't like buying on rips, so I'd like a little pullback here, but I think it's reasonable. I think the stock could be higher 52 weeks.
I'll go with you on that one too. I mean,
on the same side again. Is Jay on the same side too? Then we got
a little bit of a pullback here. On this run, it looks like you got a little room. If you're just trying to ride this thing out, 144.5, 145. Not any super major resistance, but that's what I'd be looking for next on the upside.
All right, just wanted to state really quickly, this is running with all agricultural inputs. I'll show you guys a chart right quick.
Sure.
Look at this.
Relationships. I like this, Mitch. I like learning new relationships.
So other stocks you guys can be watching. NTR, CTVA.
That's been crazy, though. NTR
MOS,
and Mosaic are just been in monster mode, man.
CF, FMC,
Yeah.
and of course SMG, a part of those stocks.
One of the ones that SMG lagged so much? Is it
FMC?
Well, because it's got the pod. I don't know.
Why is SMG lagged so much? That's my concern, because you have seen NTR. Holy, look at NTR. Look at that move. 75.86 Canadian company.
Agriculture.
I believe Nutrient's Canadian. I think it is.
What about, is Potash around anymore?
No, it's off the board. I think it actually got taken private, if I remember right. But that's just my goldfish memory, so I might be wrong.
Wow. No. Look at those things. Holy mackerel.
Big run. Anyway, all right. It is 9 o'clock. So here's
that was fun.
That was a fast hour. Time flies when you're having fun. Joel's going over to PreMarketPrep.com for PreMarket Prep Plus.
I'm going to cover a bunch of symbols, and I hope you all have a bloody good day.
Bloody good day. I hope you all have a bloody good day,
let's just stop saying that word for now.
It doesn't sound that good, yeah.
It doesn't sound that good in the context.
I don't know where the origin of that is.
I don't know either. We're going to end this stream and go over to live trading with Benzinga, Ryan, Zunade, and Mitch live on youtube.com/Benzinga. So this stream will end and redirect straight to that stream. Actually, let me confirm the redirect is set before I end with y'all. While I do that, I want to mention that all the information from today's show, from every day's show, frankly, all of our shows meant to be used as informational purposes and not for investing or trading advice. Thanks to our guest, Ryan Detrick. Thanks to all of you in our chats. Thanks to all of you watching on other platforms. We're live on YouTube. We're live on Twitch. We're live on Twitter. We're live on Facebook. Again, we're even live on LinkedIn. Can you believe it? So shout out to everybody watching on all those platforms. Guys, check out Benzinga Pro, free 2-week trial at pro.benzinga.com, or check out the link in the description to get a 25% off discount. Benzinga Pro. Last thing, if you want to become a member of Benzinga's YouTube, check it out. It's on the homepage of our YouTube page. That join button gives you access to exclusive emojis and badges. So check it out there. That's a wrap for me. We're done. Pre-market prep is over. Live trading is next. We'll see you guys after the open. Everyone, good luck out there, and stay green.